Welcome to the detailed legal update for businesses in the third week of April 2025. Brought to you by DDC Global Business Consulting Ecosystem Vietnam. This bulletin provides a comprehensive overview of the latest legal documents and regulatory guidance relevant to enterprises operating in Vietnam. The information presented here is a summary and is intended to keep business leaders, managers, and professionals informed of the key regulatory changes and compliance requirements that may impact their operations. For a thorough understanding and application of these regulations, consulting the full text of the legal documents and seeking expert advice is strongly recommended. Let us begin by examining the latest government correspondence and their implications for businesses. First, we look at official letter number 634 CTCS, issued on April 16, 2025, regarding investment incentives. According to this guidance, if a company undertakes an investment project that qualifies under the list of preferential geographical areas for corporate income tax incentives, as stipulated in Decree 218/2013 (ND-CP), the company is entitled to enjoy the relevant tax incentives, provided it meets the actual eligibility criteria. This means that businesses investing in certain regions or sectors may benefit from reduced corporate income tax rates or exemptions, helping to lower operational costs and improve competitiveness. However, the letter also addresses a common scenario in business operations: the leasing of factory premises. If a company leases a factory for production and business purposes, but the lessor does not meet the legal requirements for leasing out the factory, the associated rental expenses or depreciation costs for the leased factory cannot be included as deductible expenses when calculating taxable corporate income. This is based on Article 4 of Circular 96/2015 TT-BTC, which amends and supplements Article 6 of Circular 78/20 TT-BTC. The regulation emphasizes the necessity for proper documentation and legal compliance in leasing arrangements to ensure that such costs are recognized for tax purposes. Next, we move to official letter number 632 CTCS, also issued on April 16, 2025, which discusses personal income tax policies. The guidance draws from several key legal documents, including Article 98 of the Labor Code 2019, Articles 55 and 57 of Decree 145/2020, ND-CP, and Circular 111/2013 TT-BTC, among others. Under these regulations, income earned from night work or overtime, which is paid at a higher rate than regular daytime or normal working hours as required by the Labor Code, is exempt from personal income tax. This exemption is intended to recognize the additional effort and inconvenience associated with working beyond standard hours, and to provide a fair tax treatment for employees who contribute extra time to their employers. Employers and payroll managers should ensure that such income is properly classified and reported to benefit from this tax exemption. Turning to official letter number 668 CTCS, dated April 17, 2025, we address regulations concerning value-added tax, or VAT. When a tax authority determines that a company is a VAT-paying entity under the credit method and has a new investment project, the company may be eligible for a VAT refund if the accumulated input VAT on goods and services incurred during the investment phase, which has not yet been fully credited, reaches at least 300 million Vietnamese dong. The company must meet all requirements stipulated by the VAT law and provide a complete set of documents as specified in Article 28 of Circular 80/2021 TT-BTC. Additionally, the investment project must comply with relevant laws on investment, construction, and land. If these conditions are met, the tax authority will process the VAT refund according to its jurisdiction. This provision aims to support businesses in the investment stage by improving cash flow and reducing the financial burden of large upfront VAT payments. Now, let's review official letter number 10731 CCTK dated Extin QLDN2, dated April 10, 2025, which provides guidance on various tax policies. In cases where a company's input VAT invoice for July 2022 is determined by the tax authority to be invalid, the company must file an amended tax return in accordance with Article 47 of the Law on Tax Administration, 38/2019, QH14, and Article 7 of Decree 126/2020, NDCP. This ensures that the company's tax records accurately reflect only legitimate and valid invoices, maintaining compliance and avoiding potential penalties. Furthermore, if a company's expenses meet the requirements outlined in Article 4 of Circular 96/2015, TT-BTC, which amends Article 6 of Circular 78/2014, TT-BTC, these expenses can be recognized as deductible when determining taxable corporate income. This highlights the importance of maintaining proper documentation and ensuring that all expenses are legitimate and substantiated as per the regulations. Regarding input VAT, if a company incurs input VAT in any given period, this amount can be declared and credited against its VAT liability for that period, regardless of whether the goods or services have been used or remain in inventory. This is provided for in Article 14 of Circular 219/2013 TT-BTC and Article 1 of Circular 26/2015 TT-BTC. This rule facilitates more flexible tax management and eases the administrative burden for businesses. Finally, we consider Official Letter Number 511, CTCS, issued on April 9, 2025, which covers personal income tax policy related to dependent deductions. According to Article 1 of Circular 79/2022 TT-BTC, taxpayers seeking to claim a dependent deduction for their parents must provide sufficient legal documentation to prove eligibility. This includes evidence that the dependent is outside the working age, has no income, or has an average monthly income from all sources not exceeding 1 million Vietnamese dong. The taxpayer must also provide a commitment and bear legal responsibility for the authenticity of the documents submitted. This measure aims to ensure that tax deductions are granted only to those who genuinely qualify, maintaining the integrity of the tax system. For further details and professional advice, businesses are encouraged to contact Dongdu International Accounting, Taxes and Consulting Group, a registered member of Asia Lausanne, with offices located at Dongdu Working Space in Ho Chi Minh City. More information can be found on their official website and social media platforms. Please note, this bulletin is a summary and does not serve as a substitute for the full legal text or professional consultation. To fully understand and apply the law, always refer to the official documents and seek guidance from qualified experts. Thank you for staying informed with DDC Global Business Consulting Ecosystem Vietnam. Stay compliant, stay competitive,